RSI. Relative Strength Index. Most of you know it just as some line on your TradingView indicator window, but do you know how it is actually plotted? Think of RSI as a mood meter for stocks. Hey, look, mama, there is some line, and apparently if it is above 70, then the stock is too hyped and overbought, and if it is below 30, then the stock is too depressed and too much oversold. Really? Alright, geniuses. So RSI is basically the gym mirror for stocks. It tells you when they're pumped up and flexing too much, or when they have skipped leg day for way too long. But do you know how this RSI formula is calculated? Here it is. What kind of alien language is this? Okay, let me make this calculation simple. Imagine you're looking at a coin's price every day. Let's say you track the price for 15 days. Now, step 1, look at the price change, which is like the daily mood swing. Each day compare today's price to yesterday. So if it went up, that's a gain. If it went down, that's a loss. So day 1, $100. Day 2, $105. That's a gain of plus 5 points. Day 3, $102. That's a loss of minus 3. Day 4, $106. That's again a gain of plus 4. So you get a list of gains and losses. Step 2, calculate average gain and average loss. For the first 14 days, do this. Average gain equals total gains divided by 14, and average loss equals total losses divided by 14. Step 3, keep smoothing it. Smooth it. Smoothing what? What the hell is that? So suppose now that you have calculated the average gain and the average loss for the first 14 days, on day 15, you don't recalculate from scratch every day. Instead, you keep most of the old average, let's say 13 days of it, and add a little bit of today's result, and then divide that by 14. Because RSI is based on a 14-day average. So again, basically instead of doing the full average gain, we smooth it like this. New average gain equals previous average gain into 13 plus today's gain. Then divide the whole thing by 14. And similarly with the new average loss. Think of it like keeping a running average where older days matter a bit less. And then smooth. Step 4, the actual RSI formula. And now you get what this alien language looks like. So RS is equal to average gain divided by average loss, and RSI equals 100 minus 100 divided by 1 plus the RS. That's it. So example, if RS is 2, then according to the formula, the RSI calculated is 66.66. Good Lord, we have the devil's number. So RSI would be around 67. Congratulations. Now you know how to calculate the RSI. You now have my permission to totally show this off at your next party. That is if you want to get kicked out or banned forever from your family and friend circle. Just don't forget the thumb rule. Above 70 could be overpriced, so you can sell. Below 30 could be underpriced, so you can buy. Please note the emphasis on the word could. It's only a possibility.